Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 17th of November. Starting off with the FTSE 100, which has been dithering below its 200-day moving average there at basically 8,100. Below that, we've still got the chance of having to retest August support at 879.15, and in between, really, a bit of a random walk in the 8,000 to 8,100 area, but the key here is getting back above that 200-day line as quickly as possible. We can't rule out that we would just roll over totally and break the 7,900 area and head even lower than that, but maybe that depends on how the lay of the land goes in economic or even political ways. Moving on to the DAX, and here it's a bit of consolidation, but nice consolidation above a rising 50-day moving average there at 19,100, and also above an uptrend line there from the last year around the 19,000 level. Above 19,000, we're looking for this market to break 19,500 and that October resistance line, and then head up towards the 20,600 level, maybe by the end of this year, by the end of the next month, as a best case scenario. On the worst side, it would be that we have a rug pull back down to the 200-day moving average, currently at 18,300, which would be a repeat of what we saw back in August. RSI just below neutral 50, so not really helping us either way. On to the Dow, and here some of the Trump victory excitement seems to have evaporated. We've had a push down back into that rising trend channel that we had from this time last year. Top of the channel there at 43,800, but above that we're looking for 45,000. Below that, probably looking for an uptrend line there from August, and the 50-day line around 42,300. That would fill the gap that we had from the beginning of this month. Moving on to Bitcoin, which is certainly the star of the show, and staying on the right side of 90,000, which is quite impressive now, given the dollar's strength that we'll be seeing in a minute with other markets. But here, looking for 100,000 by the end of next month, or even sooner than that, while we remain above the recent bull flag floor at 85,000. So let's see if this market can do that. Worst case, I suppose, is that we have to retest the old March resistance, just under 75,000 as new support, but ideally, we get away with that kind of scenario. Moving on to gold, where the rug has been well and truly pulled, and we're back below the floor of that rising trend channel from February. That was 2610 was the floor there, and below that we've actually got a chance of heading back down to the 200-day moving average and the floor of that August triangle, the red line there around the 2420, 2430 area. And that could happen as soon as the end of the year. The other issue here we have at the moment is that the RSI is still at 31, so it's not even oversold yet, even after all the losses we've had now from 2,800. So quite a move on the downside there. Looking at pound dollar now, because it just one gets the feeling that this is we've seen a lasting top there for this market. Very strange how the market managed to get up to $1.34 ahead of the autumn budget, which was obviously not great for the economy. Also got interest rates set to fall sharply as well. Initial target here, obviously, the April support there around $1.23. But the overall pattern could be that we're heading down to the floor of that falling 2020 channel at $1.18. What would get us out of jail now, really, the first thing to get us out of jail would be a break back above the 200-day moving average at 128.10, which currently feels as though it is a long way away. Moving on to the stocks, starting off with Angle, and here you can see that we've had a nice turnaround. We've got what I call a V-shaped bull flag resting above the falling 50-day moving average. Broken out of that on an end of the week close basis, and the longer we spend above 11.8 pence, the greater the chance of a move to the top of that broadening triangle there from March, as high as 20 pence by the end of the year. Yes, it does look that exciting, especially with the gap close buy signal that we had on Friday. Moving on to a stock which I think I interviewed a couple of months ago, and it's obviously taken that time to get its act together, but we're above the 200-day moving average there at 0.32 on Angus Energy, looking for a best case scenario target as high as 0.66 maybe by the end of the year, while we remain above the 200-day line there at 2.32.33. So possible turnaround there for Angus. Onto a stock which I hardly ever look at, which is Adriatic Metals, and here the rug was well and truly pulled between May and August, but we've gapped up. We've had turning points where we've gapped up both in August, September, and also now in November, and looking for the shares to hit the top of that rising trend channel from back in July as high as £2.43 by the end of the year. Ideally, we stay above the floor of the channel and the gap at £1.97. Altona is next, and obviously feeling the benefit of a research note from somebody that nobody's heard of. Here you can see there's a rising trend channel base here from back in March. The top of the channel there, 2.3 pence, and above the 200-day line there at 1.47 pence. We're looking for 2.3 or more by the end of this year. That gap through the 200-day line, in fact, with two gaps this month to the upside, very strong signals indeed, and it looks as though, I suppose, the prospect of production earlier than expected would do the trick there. I think also from memory we've had direct buying as well, so everything looking well set on Altona after quite a long time to wait. Moving on to a stock which is not quite so sizzly at the moment, but may become so. Here we've got Craven, and nice end to the week and what obviously looks like a rather illiquid stock, but we've got a rising trend channel there from the beginning of last year. Top of the channel there heading for 50 pence, obviously looking for that over the next month or two if we're lucky. We can see that in July the shares did manage to rise quite sharply, but the message here anyway, above 20p, looking for 50 pence over the near term. Deltic is next. Looks like it's the only company left operating in the North Sea, or will be. Here we've got a rising trend channel base, unfilled gap to the upside off the low, which is one of our favoured signals, and 9 pence the initial target there, perhaps as soon as the end of this month. Uptrend line in the RSI window as well, making it look good. On to ECR Minerals, where I was heckled a month or so ago with the call of a break out of the range through 0.3 pence to through 0.32 pence, and as you can see, this time it worked off the back of the fact that even a month ago both the 50 and 200 day lines were rising, so it looked as though we're going to a golden cross, one of the strongest parts in the cycle. And we also had an unfilled gap off the lows there below 0.25, so that's worked twice with the shares, and hopefully will now break 0.44, which was the initial target here, the February resistance line, and head up to as high as 0.58 by the end of December. Ideally, we stay above 0.35, but celebrating the golden cross the shares had on Friday. On to First Class Metals, where I think there's been a little bit of stake building there, and here, broken that line of resistance there from July, 1.8 pence before it broke the 50-day line at 2.2. Now, all we've got left is the 200-day moving average at 2.8 to give us a target as high as 3.75 by the end of next month. Ideally, we stay above that 50-day line at 2.2 pence in the meantime. Rising on no news, as I pointed out in the week in small caps this morning, is Graft Polymer, and here we've got a rising trend channel base, we've got a rising 50-day line as well, and looking for 0.34 pence by the end of next month or even sooner, especially given the end of day close above last month's resistance at 0.21, which was also late October resistance as well. So it looks as though somebody's guessing there's going to be some good news during the week at Graft Polymer. On to Hornby, and here another decent turnaround, bear trap gap reversal signal, rising 50-day line, and V-shaped bull flag breakout, looking for the shares to head to the top of the range at 42 pence by the end of next month. Maybe it'll be on the basis of people buying their kids or themselves railway sets, but who knows what could be the reason for that. Bounce of RSI 50 as well, which is also a positive on price action. Another stock which I don't normally look at is Iomart, but here too hard to resist with the various triggers in here. It's a bear trap iron reversal, so gapping down in the end of September and then gapping up for November. The other positive is the bear trap gap reversal that we've had with the gaps in November as well, and looking for progress with the bullish divergence line in the RSI window as well. Above recent resistance at 103, looking for the top of that rising trend channel base at £1.42 by the end of the year, or maybe going into January. But the key here, certainly staying above that 50-day line and progressing from there. One of the unsung heroes of the market with its fantastic chart has been called Potash. Here, the top of the channel at 4.8 pence. We're looking for that by the end of next month, especially while we remain above initial resistance this month around the 3.3 pence level. So hopefully KP2 will deliver. Bit of director buying there from Sean Wayne in Power Metal. And here, got a dull bounce off the 11.75 pence level, and a bit of bullish divergence as well, because it's a lower low for the lower price there, but a higher RSI. Initial target here, obviously, the resistance line there from February at 14.8 pence, but looking for 19 pence, hopefully by the end of next month, while we remain on the right side of 11.75 pence. Finishing off with the most risky of the calls here, just basically noting the unfilled gap to the upside off the low for Roslin, and also the bullish divergence with a low for November, but the higher RSI trace, maybe that's enough to get the shares up to 6.8 or 7 pence over the next few weeks. And obviously we don't want to see any end of day close back below the gap there at 4.7 pence. That's it for me today. More updates during the week.